Welcome everyone. This is John Sheely, Director of Research and Development for IamADayTrader.com. I'm going to take a look at the price action for December 27th, 2016, and I'm going to place and take some trades during the morning. But as you know, we must review our risk disclaimers. Trading carries a high degree of risk, and trading may not be suitable for all persons. Past returns are not indicative of future results. Please review our risk disclaimer very carefully. Additionally, I place our hypothetical disclaimer as well. In IamADayTrader.com, we create a great amount of research in the creation of indicators and strategies. Like other research firms, we use hypothetical data to create our discoveries. Please review our hypothetical disclaimer very carefully. Good morning, everyone. This is John Sheely at IamADayTrader.com, and what we're going to do is it is a holiday week, and so it's going to be kind of slow, but nonetheless, I'm going to look at the prices and look for some trades during the day. Now, what I'm going to do is execute some trades, but I'm actually put a pause when there's no price action or setting up for a trade. So let us get started. The first thing you want to do during the day, before you get started, at least 30 minutes before the day that you're going to trade, you want to get an idea of the longer term trend. So here I have the daily and the weekly for crude oil. And you can tell today's price action is very, very small. We've had ups and downs, but we're talking about even 5-minute charts. Tick bars are only 2 cents. So it's very flat during this session so far. So I'm going to wait until there's a price action that we can execute and make some money toward our profit objectives. So our trend right now is bullish. You can tell over the last several weeks that we've tried to move up. And of course, this all occurred because of OPEC, and they may actually, quote, reduce production of crude oil worldwide. But we don't know, do we? OPEC has said this a long time, that we're going to cut our production, but it never has. Well, we're about to find out if it's, quote, true now. But instead, price action is just really flat, but it is a bull market. Even the weekly is trying to move back up. But as far as the price action right now, it's a bull market, all right, but it's almost dead. So let's go back to where we are now. Here we're taking a look at the 30-minute, and we're going to look at the price action. And it's beginning to rise up. And we do have at this particular time a little bit of a bull market in regards to the 610. Not a particularly good one, by the way. And take a look at the range here on the tick bar. You're looking at 2 cents within these little tick bars. So basically it means we've had hardly any price action to be able to execute with. So all I'm going to do is wait until we have not only some definitive trends, because you can tell our moving averages are all moving very, very flat, up and down. But not only that, the whole entire range is not even hardly 12 cents so far in the morning. So we're just going to wait for a definitive trend, and then we'll talk about taking a potential trade. As you can tell, what we're looking at, I've got a little dot here on the 610 and the 233, and it's basically letting us know its potential in regards to a little rise based upon the bull market. Now the slope of the moving averages are beginning to move up. I'd rather see a price action moving up a little bit more. As you can tell, the slope of the slower stochastics is beginning to run up, both in regards to the 610 and the 233. Now what you're seeing here is we actually have, within less than a few minutes here, actually within a few minutes, seconds, we actually were able to execute a long trade, a breakout based upon these price action here, and it was so fast that it actually went for an entry, and we had a profit objective that was really close because we had small ranges here, and so actually we had a trade for about $50. And I'll discuss this a little bit more. I'm watching the price action at the moment. As you can tell, what we're looking at is the price is running into the high of the day on the last, oh gosh, over 12 hours here. And now here we saw a double top, but it wasn't very big, was it? But that's what's happening now is the rally is occurring, but we're right in front of this previous resistance. So this is why we're going to wait and to see whether or not we break through this. If it does, we got plenty of time to look for particular trades if it turns into a longer term bull market. Quickly, I want to talk about this highs right here. Where do you think the buy stops are for traders who've gone short and they want to basically reduce their loss if the prices begin to rally? You got it. Right in here is where all the buy stops would be. The high of the day right now is 53.38. So there may be some buy stops around the 40, 45, that area right in here. And that is what we're going to be watching very closely to see whether or not prices go through this recent high here. And that's where the buy stops are. Hey guys, I want to talk about this little, I don't like to say it's a double top. It is, but it's relatively small, isn't it? Again, we're talking about a double top of 5 cents. Here we're taking a look at the momentum, and it's getting weaker and weaker as we can take a look at the MACD Platinum. So we're going to wait for a particularly good trade, and we don't see it, especially the 30-minute chart as we talked about. This may just wait to get outside of this range of prices that we've seen now for more than several hours. Now what I'm watching here, notice how the moving averages are beginning to rise up. After this little correction here, we've had two down red candles, and the 610 is trying to move up. I'm watching this here, so I'm watching the tick chart, and I may add a position right here. So what I'm going to do is buy one tick. If prices goes to 32,
order filled.
But I will tell you that this trade has to work very quickly, or I will scratch the trade. If this is going to run up, it's got to do that now. I'm going to go ahead and put a break-even stop. If we get near the highs here and then comes back down to my entry, I'm going to scratch the trade. It's got to work, and it's got to work right now. I'll put a target in the 40s, but first I want to see if we get through this price action. Just in case the price action sets a new high and hits buy stops, then I'll take some profit there. I've got a limit at 53.42, but again, this price action right in here, it's got to work very soon, or I'm going to scratch this trade. I've raised my sell stop to 25 at the moment. Again, as time moves on, I'm going to move that stop loss. As you know, I do discuss scratching trades. I actually scratch trades quite a bit. Prices have to move, and they have to move quickly. Otherwise, I'm out of here. So you can see we're watching the prices now right at these highs. It has got to get going here, or if I begin to see momentum again just get weakened, then I'll scratch the trade and wait for a better time. I've already adjusted my stop loss and moved that to 27. You can see that prices are beginning to get near the highs, so I'm going to wait very quickly, and we're about to either scratch this trade or close the trade.
Order
I went
filled.
ahead and scratched the trade. I did not like this 5-cent decline. We did not get through these highs, did not hit the buy stops, so I'll wait. Now, don't misunderstand me. I may put on a trade here even if it runs up, but we'll just wait until we have a better trade here. So far, the moving averages are still bullish. And in this particular case, if I have a green candle in the 233, then we'll take a look at the possible long trade here. But it's just not there yet. We're now going to watch the price action to see. This red dot means that we have the possible setup, a bounce between not only the 233 and the 34, but also taking a look at the price action in the 89. We'll take a long trade if there's a close above the 8 EMA. Okay, we're going to go to market. Once we see a close above the 8, that's the 8 right there, and so we'll watch that. As you can tell, we're getting all we now it's around 30, so we'll go ahead and go long only if once there's a close at the 8. And once you see that close in that bar above the 8 EMA, we'll go long and we'll put a stop at 24. Okay, we've gone long here based upon this close above the 8. The 610 is still bullish. I'm a little concerned about the flat price action in the 34, but we'll put a stop in at 24, and we'll see if the price action is going to help us here. I have not put a stop in, that is a limit for a profit objective right quite yet, because I want to see if the prices go through these highs. Otherwise we again potentially scratch the trade, but I want to see if whether or not this rally right here is finally going to break through. If not, then we'll move our profit objective and wait for another trade. Now, because prices are fast from time to time, I'm going to go ahead and put a limit at 42. So if the market suddenly just drives up and goes up and hits these new stops, these new highs that is, we'll go ahead and take some profits at the new highs. We're going to find out, aren't we? Because the prices are getting close to this new highs in all of this price action right here, and we'll see whether or not we finally get through this thing. It's close. Let's take a look. Now I have already moved my sell stop to 28. So I now have a risk of only $30. And this thing had better get through.
Order filled.
Okay, all right. We have hit our limit at 42. These are the buy stops. So let's talk about this trade here. You're looking at the price decline underneath the 34. The 89 was still bullish in the 233. The 610, you can tell all of these were bullish. There was a little bit of momentum in regards to the MACD, but it wasn't serious. And what we're talking about is the potential hitting these buy stops. So we bought when we had a close above the 8 EMA, put a stop at 24, and it got close. It got within 3 cents. but it then hit the new buy stops. We went ahead and took a profit, and it's primarily because once you hit these buy stops, then you're seeing exactly what you're seeing now. The buy stops are in, they done, but look what's happening because all the aggressive buyers are done. So we're watching the prices now to see if we're a possible trade here in regards to a retracement. So we'll watch that. But we had that very nice trade here as we watch the price action here. By the way, we are getting close to the 53.50, and that can be some resistance for us. So this is one of the reasons we may wait to see if this prices are going to decline a little bit. We've got too much resistance right here at the round number of 53.50. Now, by the way, we have not only 53.50, we have divergence now in regard to 233. So this is why we're going to watch this price action. We may actually look for a possible short here, and so we'll watch the price action and see how it acts at the 53.50. The divergence is not super strong. We have it not only the stochastics but also the platinum. So we'll look for a possible short, but to tell you the truth, the strength here of the 610 may override the small divergence that we have in the 233. There is no divergence in the 610, which is why I'm waiting here to follow this price action. Now for me, we're looking at the price action here. Now that we've gone above 53.50 easily, I'm not going to count that resistance now. It was only temporary and it's too high, so we'll just wait for a particular price here. By the way, you can see that the prices actually have moved higher now, and we've actually set new highs for the crude oil. What we're watching for is a possible scalping trade. Here we have an overbought slow stochastic, and we are watching the faster stochastic. That's the white, and if it has a uptick in the stochastic, the fast stochastic, which is the white, we'll take a look at going long, but watching this potential correction, and then we'll made a quick trade here. Basically here we're looking for a profit objective anywhere from 6-7 cents. We'll wait to see whether or not we have an uptick here. Again, even the 610 is having a correction, so we'll watch this very close. So everyone, what we're going to do, go to market once you see the stochastic close up, run up, and buy above a green candle. So I want to see both. I want to see the stochastics going up and a green candle. And we'll let you know when we have gone to market here.
Order filled.
Okay, we've taken that trade. Now I've got a profit objective right here. It's already in there. I already put a stop at basically a profit objective of 57. So in other words, if this thing sets a new high, I'm out of here. So get ready. There's a fair amount of profits, trades here. I see that we've got a fair amount of size, but I'm going to close it obviously if it doesn't work very well. This should work now. In other words, it's we talk about scalping. This needs to go up, and it needs to go up quickly. As you can tell, prices have just moved back close to our entry level. I may scratch that trade, everyone, because we have such a divergence. Scratch this trade.
Order filled.
I went ahead and scratched that trade. I don't like the divergence that I see in the MACD. We've had a rally up here, all right. We've had a double top, and it did not break through. So I have actually scratched that trade at the same price that it in. So basically it cost me $5. I'm now actually watching for a divergence trade, so we may look at going short. That is based upon a close under this right here, the 8. We're going to put a buy stop above there if we trigger, but we're looking now as a divergence trade going short.
Order filled.
All right, I've gone short based upon the close at the 8, and I'm going to put a profit objective. I know normally we want a 2 to 1 profit objective, but our ranges are very small right now. I'm going to put a buy stop above all of this at 58, and we'll see if this divergence trade is going to work for us. So far it's running against us. We had a double top, we had a divergence, and now we'll see if it works. I'm probably going to put a profit objective right in here around the 45 area. The reason being is that once prices get down, the lows will be underneath the 34. I'm going to go ahead and put a limit buy here at 45. I know that's only $50, but we've only had very small ranges today. So I normally would like a 10, 15-cent profit objective, but we don't have that right now. It's just too small ranges. Now, let's talk about scratching trades. If I have 5 bars and it's not working, divergences in certain trades should work quickly, especially a 233 tick bar. So we'll watch. Now, saying that, if I see the price in touch the 34 and give us a conflict of the trade, whether or not that we have a divergence or do we have a bounce from the 34, then we may take some quick profits out of this and then decide if we're going to go long or just stay on the side. Now I'm already 1, 2, 3 bars into this. Again, if I see 5, all right, now we're watching underneath the 34.
Order filled.
Okay, I went ahead and took profits here at 45. And the reason being is we have a conflict between the divergence and double top and the 34. Now, am I looking to go long here based upon the price action at the particular time? Actually, no. And the reason being is I'm going to watch the 610 for a while. But we had a little profit here. And I'm just going to watch the price action primarily because of this. We now have a sloping, slow stochastics in the 233. Notice how flat the stochastic is on the 610 at the slow stochastics here. And we've had a little correction here in the 610. So I've got a conflict of whether I want to take that trade or not. So we're going to wait. We took a little quick profit here. And so we'll watch the price action. I may take a trade that has an uptick in regards to the fast stochastics in the 610. So let's just take a look. Now I want to watch the price action right now. It is now 9:30 Eastern Standard Time. The reason that is important is that that means stocks are beginning to trade. And so you're going to see a little bit of up and down price action, even our crude oil, based upon trading of the stock market and stock indexes. So this is why you're going to watch prices kind of go up and down for a little bit, because there's a lot going on at this particular time of the day. All right, we're going to put a buy stop here and go to market here.
Order filled.
And it's based upon this correction here, the price action based upon moving by the 8. And in this particular case, if the prices get to 56, that's at the highs here, I'm going to put a profit objective here, probably 59 at the moment as a limit. We're going to put a stop at 42. Again, this better get going fairly soon. Again, this is based upon this correction in the 610. Alright, it's moving up pretty good. So what I'm going to do is I've put my button on for execution, closing the trade if I need to. I've already raised my sell stop to 46. We're 4 bars into this trade. 1, 2, 3, 4. Normally after 5 bars I will move the stop from the original stop to a little closer to our previous entry. Now what I'm going to do here, alright, we're at the highs. If this doesn't,
Order
alright,
filled.
we got filled here. You're looking at scalping. And I'm hoping that you can see that you can make money trading the fast prices in a tick chart. And you're going to learn that by watching, by our room. Now, does it take a lot of learning? Of course. Everything that you've ever done in the past has created some time to learn that skill. Whether or not you're a dentist, engineer, a plumber, it doesn't make any difference. You need skills. Well, you need skills for trading. And I think you're going to find that you're going to learn how to do this. And you're going to actually kind of like what we do, because price action is fairly fast, but we give you the tools to make the trades. So I'm going to go ahead and close the video because this is fairly long here. Now this is all of about little more than hour and a half, 2 hours. And we've had several trades here, of which we're going to show you exactly which trades we did with the video. Okay everyone, what we're going to do is a recap of the trading that we've done in less than 2 hours. And what we had was this red dot meant that we had a potential setup based upon the price action that was moving up in regards to the slow stochastic was moving up, the 34 was moving up, and the 89 was moving up. I was waiting for a close above the 8. Once it occurred, we then went to market. Now the ranges are very small, so I used very close profit objectives. We originally put a stop loss underneath here, 2 ticks underneath, and as you can tell, it was a quick trade. We could have basically reached a larger objective, But we don't know that, especially considering the small ranges that we had. So we basically had a quick trade of about $50. And so let's take a look at our other trades here. As you can tell, prices began to move just sideways, and therefore I'm glad we took profits somewhere in here because the prices started just moving up and down. Now we're looking at this particular trade where the prices had a correction. The slope of the moving averages are very solid, and we entered when we had a close above the 8. And I was actually trying to get some profit here, but I wasn't able to hit my limit, and I saw instead a 6-cent decline very quickly. Also, what I had was a very low stochastic that was beginning to decline. It was moving down. The MACD was showing you a large divergence, so I scratched the trade. I took a 2-cent loss, $20, and wait for another time. Now we're taking a look at the execution chart. Remember, that's a 233. Actually, what we were looking at here is regards to the 610, but the price action in the 233 was still very supportive. This is why. The MACD was beginning to rise up. The market was oversold in regards to slow stochastic, but what was happening here? It's beginning to bottom up, and the faster stochastic began to rise. We had a 34 bounce, and we were watching for what? A close above the 8, which is the 8. We had it, one tick above, went to market. We had a stop loss, but as it turns out, this happened to be very fast, and we had a very nice profit here. And again, taking profits is fine. As you can tell, prices begin to decline. So basically, we're going to wait for another trade. Now we're going to talk about these two trades here. We had a correction in the 233. We had two bars that was basically correcting the bullish price action that we saw. The 34.89 is still moving higher and higher. The slope of the moving averages are up. And we went long based upon a green candle and a tick. But you're noticing within 2 bars, I scratched that trade. Why did I do that? Well, take a look at what happened on regards to this price action. It rallied all right, but the MACD Platinum actually began to go down. We actually had a double top, a little rally here that was actually a divergence. So what did I do? I scratched that trade, wait until we had a red candle underneath the 8, and we went short. But the reason I talked about having a fast and quick profit objective is because these are such small ranges. Normally I would 2-to-1 ratio, but our bars right here are only 2 cents, so I made it to where it was a little closer. So we put a limit at 53.45, and within a few bars we got filled. But I already discussed that if this thing wasn't working within 5 bars, I'm going to be scratching that trade. Well, it reached our limit here, so basically we're waiting for a new trade. Now you're taking a look at the red dots. That meant we had a decline underneath the 34, and so I'm going to be watching the price action in the 610 for possible long again. It did not take long because the prices went underneath the 34. The slow stochastic is still rising. We do not have a concern about divergence or momentum, and we had a close above the 8, and we put a stop loss underneath, and within a certain amount of time, not much, actually 3 minutes or so, we reached our profit objective here at just above the new highs. And in this particular case, the market rallied up and we're able to execute a little quick profit here. Now we're taking a look here at when we've basically created our video here, and we'll watch the market for the rest of the day. But let me tell you something. We've had a very nice day here. Guess what? I am not going to lose my money at the end of the day. If I begin to have losses, then I will shut her down because I'm going to end this day profitably. Good day here. But I'm not going to lose all of these trades again because, listen, I did not have a big loss here, which is, very thankful. Let me tell you something. We have losses. And we've had, from time to time, we will have a losing day. But not today. And based upon the price action that we're talking about. What you're looking at is scalping. We're going to show you how to do that. But you need to be in the room. You don't have to have an account. We're going to teach you how to do that. If you're not so sure about risking your money, that's fine. You're going to learn how to trade. And then once you are confident, you can then move from a simulation to a real account. So hopefully you'll like what we've seen here. And we'll be doing a lot more videos in the future, and including our bad days. When is it that the market is just really bad? It happens, and we create those videos too. I am John Sheely as Director of Research and Development.